you run, you will not be able to see what is coming behind you. On that thought, welcome to our Zoom web series hosted by One Tree Hill and PMS Card on the Juggernauts, which is a conversation with uncommon and curious fund managers. Hi everyone, my name is Jai Shah and I have with me today Manish Gupta, who is the founder and the fund manager at Solidarity Investment Managers. Prior to this, he worked at the Boston Consulting Group and also with Rakesh Jhunjhunwala. Welcome Manish to our show. One of the things that we like to quickly dive in, to get the creative juices flowing and the adrenaline pumping is our what we call a machine gun 15. So if you are ready, I can start.
Mm-hmm.
Yeah,
okay.
Perfect. So diversification or concentration in equities?
Concentration.
Okay. How would you rate the research on the street on a scale of 1 to 10, 1 being the lowest, 10 being the highest?
It depends on the research house. I like Kotak's research. I would rate that as at least 8 or 10.
Okay, and on an average, if I have to push you?
5.
Okay. How long do you think India will remain an emerging market?
I think we have to step out of our belief zones. It's a bit like IPL cricket. People who are not from the metros are performing really well. So not for too long, I hope.
Okay.
We have to change our attitude. We have to believe we can win, right?
Sure.
So unless you start with a change in belief, and we have this defensive mindset, it's not going to happen. The day you start seeing a change in beliefs, the emergence will happen very quickly.
Okay, fair enough. The biggest red flag that you see in a stock apart from corporate governance?
Capital misallocation.
Okay. The question on everybody's mind, are we at the bottom?
I have no clue.
Okay. Which balance sheet seems to be the most stretched? The governments, the corporates, or the individuals?
I think within corporates, there are a lot of companies, at least in the ones we own, where they're sitting on a lot of cash. So I think it's too wide to take a generalist view. It really depends on a case-by-case basis. Theoretically, a government can print money, right? So you don't have to worry about the government's balance sheet. As investors, we can choose the corporates we want to invest in. So as a broad-based, I think I would worry about balance sheets of individuals because credit has been so free-flowing in the last couple of years.
Okay. Top down or bottom up?
Bottom up.
Bottom up. Okay. And I just want to point this out. In the 6-7 people, and you're the 7th person, 4 have said top down, 3 have said bottom up. Just putting it out there.
Yeah. See, there are multiple paths to nirvana, right?
Sure.
It's not as if bottom up is right or top down is the only way that's right. You have to choose what works for you, right? So I've always believed India's never been an attractive macro story. It's all about great companies who, despite the odds, execute well. Right? That's our belief. Somebody who believes in top down need not be wrong, right? We have to follow what works for us.
Absolutely. How would you rank today's FT situation, good, bad, or ugly?
Sorry, what is FT?
Franklin Templeton, where they're closing down the 6 debt mutual funds.
Well, I think they have panicked first. So, the ones who are going to panic later will be in a problem. Okay. So, the one who panics first escapes with the least haircut.
Fair enough. What percent of the time do you think you're right in the market?
What percentage of time am I right in the market? Well, I think you're asking 2 questions. We don't try and time the market.
Okay.
The way I look at it is we tell all our partners, that's all our clients, to give us a 5-year view. And I believe that if I can get 7 out of 10 calls right, we'll do well for them, right? So as a long-term investor, we are exclusively long-term investors. In fact, trading and derivatives is completely banned at our firm, including in non-equity asset classes. We are exclusively long-term investors. And we tell our people that, you got to give us a 5-year view. And one consequence of being long-term investors is you kind of, will look stupid in the short term. So we've had a very bad March, but, that's par for the course. Time is the friend of the long-term investor because of the power of compounding, right? So I don't try and be right in short-term periods. I want to be right in the portfolio choices over a rolling 5-year period.
Okay.
And we've been in inception for around 6 years, and I think we haven't done too badly. I think over the last 6 years, I think we're beating the market by over 10% on a compounded basis. And I think we've only had maybe 2 positions where we've lost over 50%, where we've gone seriously wrong. So it's not about time horizons; it's about choice of companies.
Okay, fair enough. One interesting aspect that not a lot of people know about it, and I'm going to say that maybe not even your wife or your daughter know about it.
That's a curveball. Some interesting concept about me, which my wife and well, maybe we'll come back to that a little later. I really can't think of something because my wife perhaps knows more about me than I do.
Okay.
Because if your mother can tell your wife that she's that she really appreciates how much my wife puts up with me, then you got to salute her for that. So yeah, I don't think there's anything about me my wife's not aware about. Yeah.
Okay. Let me spin that around a bit. Something that most people don't know about you.
Something that most people is that I guess I'm an introvert, and I really enjoy my own solitude and being with myself. My wife and I both love to read. We both love to meditate. She's just finished her MA in psychology. She's a counselor at the age of 43. So both of us find a lot of meaning in what we do, and we just enjoy our solitude. Yeah.
Super. What is the one thing that people get wrong about the markets, or what is the one misconception that people have about the markets?
I think that you can invest long term and trade short term simultaneously. You have very rare geniuses in the market. People like Rakesh Jhunjhunwala, people like Damani ji. These are rare geniuses. All of us play cricket, right? No, I don't think any of us can bat like Kohli. Right? So I think one should confront your own reality, and you got to choose whether you are. It's not about playing the game. It's about being clear about what game you're trying to play, right? So someone who's trying to play T20 and a test match at the same time, you're not going to get success in either of them. So choose what game you're playing.
Okay. Would you double down or double up?
It depends on so we cut our portfolio in primarily in 2 buckets. We have clear leaders and we have emerging leaders. So loosely, clear leaders are large caps and emerging leaders are small and mid caps. So I would double up on a company that is executing well and the stock price is falling just because of market conditions, right? So for example, our portfolio is fairly heavy in specialty chemicals right now. So some companies there we'd be happy to double up on if the price is falling. In small and mid caps, I would not double up because in time periods like this, liquidity evaporates and stock prices can fall irrespective of how the company is performing. So I would not double up till liquidity comes back. So there's no generic rule. It's really situation by situation.
Okay, fair enough. Are you an optimist, pessimist, or a realist?
I'm a realist with a bias towards optimism. Okay. If you're not an optimist, you should not be a long-term investor. This is the first thing I learned from Rakesh Jhunjhunwala, right? So if you're pessimistic about India, if you think the country is a basket case, for heaven's sake, don't put your money in equities, right? Sure. You have to be a believer in India if you are investing in Indian equities.
Okay. That sort of ties up to my next question, but contrarian or trend following?
Again, I don't think, we don't trade, right? So we are long-term investors. Now, so when you say a trend follower, I would put it loosely as the consensus need not be wrong, right? Sure. At the same time, you have to have the courage to, act in a particular way, even if the crowd does not agree. This is a very lonely business, right? Of course. A long-term investor will be successful if the crowd agrees with him over a 3 to 5 year perspective, right? So again, it's not, it could be both. So we are investors in some companies which are market darlings, right?
Sure.
Just because of compliance reasons, I won't name them. But,
Sure.
we are also investors in companies where, the market does not agree with our view, right? So, it's not, you don't, consensus need not be wrong, like I said.
Okay. And will oil go back below zero?
Uh, Now, normally I don't like to forecast because I just don't know. But I think this one I would find it hard to believe.
Sure.
What's happened. The reason oil went below zero is because of special circumstances around how the WTI trade is settled, where you have to take delivery, right? So I think it was a very special circumstance. If the economy stays weak, maybe something like this could happen for a month or two. But structurally, oil going below zero, no, that's not possible, because the laws of demand and supply will catch up. Some people will go bankrupt, some supply will get shut down, demand will slowly come back. So, these are extraordinary circumstances.
So there's no way I can go to a petrol pump and ask them to pay me to fill petrol or load up the barrels in my car.
No, no, no. I'd like to have some of what you're smoking, Jeff.
Okay, so we're almost towards the end of this. But one of the last questions that we end with, where do you see the next innovation? It can be as broad-based as you can, not necessarily to our markets, but as broad-based as you can.
Honestly, I haven't thought about that, because we do a little bit of venture capital, but not in the kind of areas that you're talking about. So I honestly don't have a very thoughtful answer for you on this one. But
Okay.
my sense is you will see a lot of money towards diagnostics, being put in diagnostics and all that. And while obviously Theranos blew up based on
Sure.
some crazy promises, but I would imagine, again, when an event happens, it acts as a trigger for a lot of money to go into a particular area. So I would imagine, diagnostics could be an area, but I honestly don't have a very thoughtful answer for you.
Fair enough. The good news, Manish, is that you won. So your coffee with Karan Hamper should reach you right after the lockdown.
Yeah, okay.
And on the lockdown sort of piece, where do you think the lockdown is headed?
So I think it's a complicated problem, because see, people's incentives drive decision making right now. And again, my sense is that we have completely overreacted, and I guess the prime minister is acting in a particular way because he's got multiple variables he needs to optimize on. It's just not economics; it's about lives, right? But I think right now the pendulum has perhaps swung to an extreme, right? And no state government, I think, will try and demonstrate the courage to open up the economy, because one can always blame the center for a loss of livelihood, right? And you can take credit for protecting lives, right? But I think the good news is that the government is trying to slowly open up the economy. They must open up the economy. Otherwise,
Right.
the damage to livelihoods, the social tensions are going to cause far more loss of life than the COVID-19.
Sure. And sort of just on staying on this point, in terms of a lot of people have been started talking about food security, right? Where if the lockdown sort of continues in the manner it has, a lot of people are actually going to go hungry because India has not figured out food security for everyone. Would you sort of buy into that viewpoint?
No, I don't think I agree. I think our grain storage is brimming over. I think the challenge is distribution of the food grain. It's not
Sure.
availability of food grain, right? So it's really about distribution, and it's not that we don't have the resources to do that. And I think uh, Indians always do very well when our backs are against the wall, right? So I don't think anyone in this country is going to starve because of this. Yes, I think there are problems of availability. We have stigmatized COVID-19 so much that people are afraid to go out and help. But there is no lack of availability of food.
Fair enough. Fair enough. And one of the interesting things what a lot of people wanted to know, especially or in a more sort of tangential manner, is, so let's say for me, One Tree Hill is a viewpoint in Mathiran, right? And that's how I named my company. How did your move from consulting to working with Rakesh ji to Solidarity come about?
Okay, so I've always been curious. So I was in consulting for 7 years, and I had a chance to work with wonderful people. I did a lot of work with Arun Maira. I did a lot of work with Janmajay Sinha, so I learned a lot. But I wanted to always build a business. I didn't want to be on the advisory side. And I left consulting to want to take a role up in corporate because I wanted to be involved in building a business. But that stint didn't end up very well because I was like an internal consultant in MNCs. And as luck would have it, one of my friends, Utpal Sheth, who I had interacted with during my consulting days, he reached out to me and asked me if I had wanted to join Rakesh ji's team. And they were trying to build a private equity business at that point in time. And they thought my consulting background will help. So I was with them for 8 years, between 2006 and 2014. It was like going back to university again, complete. So to be able to learn and observe Rakesh Bhaiya in action for 8 years, I was on the board of a few companies, some really terrifying experiences.
Okay.
But my stint at BCG and again with Rakesh Bhaiya and my experiences in private equity, gave a sort of a framework, right? Of how I would like to invest. And I always had that little bit of a bug in me of creating something, building an organization. And so desire for creative freedom, desire to build an organization. I spoke to Rakesh Bhai about it, and he was fairly supportive. He said, if you don't do it now, you won't be able to do it later, because I was about 41, I think, when I started Solidarity. And you keep a tiger caged for too long, he'll forget how to hunt. Not to say I'm a tiger or anything, but there's a point in life where your ability to take risk goes away. Your kids grow up, you have to think about not what you would like to do in life, but what is right for the family. So I think it was the right age. Rakesh Bhaiya was very supportive. So I did some consulting work for him with some of the P investments while we were building our business, which gave some cash flow. So it worked out very well. I'm still on, I think, one board where he's an investor, and he serves as a mentor. He doesn't shy away from calling out my bullshit if he thinks I'm getting it wrong. And I have some. So the name Solidarity actually came about because I just wanted to do the right thing by people, and the only way to do the right thing is to have complete skin in the game. And that's how the name Solidarity came, that whatever we will do for you, we will be doing the same thing for ourselves. So if we don't do well for you, we will not be doing well for ourselves. And I'm very clear that as a firm, we don't want a business model where we make a ton of fees but our clients are not doing well, right?
Got
So
it.
that's the background for the name, right? And essentially it means alignment of interests, right? Good or bad.
Fair enough. So on Solidarity and coming to your PMS, I think on PMS card, I think you're one of the top rated funds and have seen success across time. What would you say is your sort of specific edges and USPs that has contributed to this success?
So, firstly, thank you. I appreciate you're calling out our performance. See, I don't think any fund manager has monopoly on insight. If you look at performance over long periods of time, you will see all the top rated fund managers in India, within a narrow band, right? So, is Dravid a better player? Is Tendulkar a better player? I think that debate is irrelevant, right? If you're a few percentage points over there. I think, what really differentiates firms in this business, I think this is first a business of trust. It's not competitive sport, right? The investment business is first a business of trust. I think clients understand that circumstances can be beyond your control, right? So we spend a lot of time trying to build trust. we spend a lot of time making sure that people understand the product we are selling, what we are trying to do, right? So even in this market carnage, right, we have had less than 25 basis points of redemption. That's less than 0.25%, right? Because our partners appreciate the fact that we've always told them to think of life in buckets of 5 years, right? So I think, like most funds out there, we follow a very disciplined process. If our performance has been good, it's because the way we are investing right now works in favor. One thing I think a lot of a lot of wealth managers do, including you, is put up performance in very short intervals of time, which I think is actually not good for your clients, because you're confusing people on how to think, right? I think you have to encourage people to take minimum rolling 3 or 5 year horizons, right? So that's it. I don't think there's anything unique in our investment process that other people can't do. There are a lot of fund managers I admire, and today everyone has access to everyone else's portfolios, right? So it's just a question of finding what works for you and being able to stay true to that, and being able to attract partners who understand what you are doing and who will not panic when the inevitable steep correction in the market comes.
Got it. Got it. And if you could just ask you to sort of elaborate a bit more on Solidarity sort of stock selection process,
Okay.
that will be really helpful to our audience.
Sure. So we're essentially, I'll just simplify this as much as possible. And we actually publish a quarterly letter, and we publish the occasional blog. Everything is on our website. That's solidarity.in. But in a nutshell, we are essentially trying to answer 4 questions. The first thing is, we are looking for predictable growth. Without growth, equities will start getting priced like bonds, right? So we want a company where, broadly we see tailwinds for growth over the next 3 to 5 years. So we tend to first start with a sector that is seeing structural tailwinds for growth. The next question that we try and answer is what we call, is there an X factor in the business? Is there some competitive edge, right? So because unless there is an edge, the margin of the business or the return on capital is not going to be sustainable. If you have an edge, you're more likely to be able to maintain or increase your capital efficiency, your margins, and your differentiation, right? So we tend to look for that. The third question is this a management team that you can trust? So it's not about governance, but alluding to, I think the first question you asked, it's also about how they allocate capital, right? I don't think we would look very favorably at management teams who would be taking a scalpel to jobs right now. A downturn is also a good time to invest, right? So we tend to look at, cultures which are self-reinforcing, which are more sustainable, right? And the last one is, the price should be broadly reasonable. We have internal models based on different companies, growth rates, ROEs, the strength of their business models, what multiples we'll be willing to pay, right? So, but the price is always the last question. The price is not the starting point, right? The starting point is always the first 3 questions, which is broadly predictable growth supported by tailwinds. Is there some edge in the business which cannot be easily replicated? And, is this a management team that, we would trust? Right? And once these 3 questions are answered, you kind of wait for the price to come in your band. And once it comes in your band, you buy. So specifically, right, just to answer your question, is that if we see a path to a reasonable IRR, then, we will not let what's happening in the market affect our purchasing decision. And we use position sizing as a means to manage risk. So, we won't go into a position at one shot. We'll probably build up over time.
Is there a lifespan to each particular strategy or a line of thinking?
See, the perennial thing in market is cycles, right? I mean, I think I was trying to allude to that when you said that, we've been very strong performers, right? I'm saying every style has a particular cycle, right? Sure. So someone who was very heavy in, say, IT in 2000, right? Perhaps saw a top. What works keeps changing. So between 98 to 2000, it was IT. between 2005 and 2008, it would have been real estate and infrastructure. Between 2015 and 2018, it was NBFCs, right? So,
Right.
as a fund manager, you need to understand which sectors are now in froth and which sectors actually have now tailwinds, which the market is not reflecting in those valuations. And I also alluded to it where I said that over time, when I say time, I'm saying don't look at 1 year, don't look at 3 years.
Sure.
Over time periods of 5 years, you will see that within a very narrow band, most fund managers' returns will converge because the style that somebody is following will be in fashion, right? Without a lot of churn, right, which has its own impact costs and cost of tax. You can't be jumping in and out of stuff, right? So, we like to look at stuff over 5-year horizons, and we won't sell stuff even though it might be slightly overvalued. If it's ridiculous, obviously we'll sell, right? But if it's slightly overvalued, we'll just, let it compound and let the. So when you say that stuff will degrade, I think most fund managers who are following a particular style, you will see their returns converging over 5 years, which is why I said that this is not competitive sport. The business is actually more about trust.
And you mentioned trust quite a few times. What a lot of people are wanting to see, especially with the boutique fund houses, is what we call skin in the game, right? And I think that sort of also plays a good part whether an investor puts his money or doesn't put his money or starts thinking about putting his money. Your thoughts?
Okay, so you'll be happy to know that 100% of my assets are invested in Solidarity, right? I have also told my brother to choose his sibling more carefully in his next life because all my brother's assets are invested in my fund, right? And 100% of my mother's assets are invested in my fund.
Sure.
And, very scaringly, my mother-in-law has also put a lot of her money through me, right? So I think skin in the game is an absolute prerequisite,
Sure.
So very early, right? So, I've invested some money outside India because my kids might want to go abroad and study. But if I exclude that, 100% of listed equities in India, right, are invested through the fund. I think that's the only way of doing it. Now, it need not be 100%. It can be 80 because you might want some protection from your own self, right? But we believe in skin in the game, right? And I again link this to the choice of our brand, Solidarity, right? If I make the wrong calls, I should suffer as well. And my promise to my partners is that there will be nothing in my family's portfolio that is not owned for you.
And one of the things that comes up immediately after this question, and if I could just take 10 seconds and say that, look, I think I've made a lot of mistakes, right, over my short career. And at some point, I lost 6 months of my salary in a leveraged commodity trade, right? If I could ask you, what are those 1 or 2 events where you've given a significant sort of tuition fee and had significant learnings from that?
Well, so this is an embarrassing question, but I think I made a lot of mistakes, and we continue to make them. But I think a lot of mistakes were made when I used to work with Rakesh Bhai, right? And I think the greatness of the man is that he never pulled me over for those mistakes, right? And he said, you recommended it, but finally it was my call. And so I think if I look at those mistakes, I would first put it is wrong sector, right? So I just, I've never understood how you can make money investing in infrastructure in India. If your working capital is over 180 days, right? Any margin you make will be eaten up by your interest payments, right? And with governance and all that. So I think the first mistake is betting on the opportunity, right? Because there is the promise of growth of infrastructure in India, but ignoring everything else that comes along with that. So I think the first mistakes that we've made is obviously in infrastructure that I have made. And since I think the last 6 years, we've never touched anything in infrastructure. Again, this is not to call out anyone who does. It's your ability to understand it and being able to play it well. We just don't think we can do it. I think the second mistake, again, has been made in, underestimating how promoters think about value creation, right? See, a promoter will have a 10-year view of his business, right? And most promoters, will want growth, right? But if a promoter doesn't appreciate how value will be created, right? If he doesn't appreciate capital allocation discipline, if he does not appreciate not excessively diversifying, if he does not appreciate not having the cash flow to fund growth areas, then that promise of growth becomes a mirage. So I think where again went wrong is where one is bet on promoters who've not been very disciplined.
Okay. And, completely opposite to that question, what is that one sort of aspect you saw in the market, or one stock or one sector which was extremely obvious to you, but the majority of the market missed it?
Okay, so we haven't thought through that. And again, from a disclosure perspective, I don't want to take names,
Sure.
but I think as a firm, we have invested in specialty chemicals through almost from 2017 onwards, right?
Okay.
And I think a lot of that is now coming up in the mainstream because of what's happening in China, right? So I think as a sector, perhaps as a firm, we entered that far earlier than other people, but I've not really thought through it like that, and as a firm, we won't put all our eggs in one basket. So it's not that, we like a sector so much that, we'll just load the portfolio just with that, right? Because, it's, as they say, it's not what you know that kills you. It's what you think you know for sure that just isn't so. I think this is a quote from Mark Twain or something, right? So even though we got the sector right, and we are very heavily concentrated in that sector right now.
Okay.
I think it may be about 30%, 35% of our portfolios, but I think we were far early investors in that sector.
Oh, fair enough. And I think, post that conversation which you're talking about, we obviously did a lot of work at PMS card and said that, look, it can't be only performance, whether shorter term, medium term, or even longer term. There has to be a whole bunch of other parameters to be looked at. But super, Manish, I think we're almost at the end of this Q&A. One of the things that, a lot of people have started investing, and a lot of fund managers who've taken external money, client money, etc., and they've started sometime, in the last quarter or the last 2 quarters, based on your experiences and your highs and lows, what would you be telling them right now?
Yeah, so I would say, first you have to understand yourself, how you're wired, right? Figure out, don't try and be anything else. You have to figure out how you are wired as a person, what process and what style will work for you, right? The second thing I would say is choose your partners carefully. That's the clients, we call our clients partners. Choose your clients carefully. Your single biggest source of success will be the quality of your client base. Because as a fund manager, you need to keep calm. And if your clients panic at the wrong time, they will pass on that, panic to you. You can't be calm if your clients are not calm, right? So I'm not actually great at giving it good advice, but this is what I was talking to our team this morning. So just remember that. So I'm not good at giving advice, but I would say figure out how you are wired, develop a process that will work for you, and make sure your clients understand the process you're going to follow.
Okay, fantastic, Manish. And coming back to that question which is still left, do you have an answer now?
Sorry, I forgot the question. Can you repeat what it was?
Something unique about yourself that maybe your wife also doesn't know.
Something unique about myself. Okay, I'm told I have a killer smile,
Your
so
killer smile, okay.
I'm just waiting for my wife to recognize that.
Of course, all of us are. So.
Okay,
perfect.
So thanks for having me.
Thanks for your time, Manish, and
Sure.
look forward to our interactions.
Sure, take care, Jay. Thanks.
See you, Manish. Bye.
Bye.